As a trader, you normally want to have as many confluences as possible in the market before deciding to take any entry in the market, and that's for a simple reason: for you to be able to avoid market manipulations, and also to be able to take the best and high probability trades in the market. So yesterday I did a market breakdown on gold, and I was expecting the gold market to continue pushing to the upwards, and the market is still respecting my setups. That's because I normally look for as many confluences as possible, at least 3 to 6 confluences before deciding to take any entry in the market. So today I'm doing a market recap on gold, and I will show you some of the confluences that I did look at before taking these entries, and what I'm expecting to happen in the near future. So actually, I did share these entries in my free Telegram channel, and I did share them in my in my Instagram page. So if you're not there already, make sure you check the links in my bio and join my Telegram channel and follow me on Instagram, so that you can never miss out on this information when I'm sharing them. So I normally do my analysis all the way from the bigger time frame, coming down to the 1 hour time frame to take my entries, because I normally want to have as many confluences as possible, and that will give me the confidence to take a trade in the market. So from the bigger time frame, I want to show you some of the confluences that I did. So then after that, you'll have to see how important it is for you to have many confluences before taking any entry. So before taking these entries, if you've been watching my previous videos, I've been showing you that I've been starting my analysis from the daily time frame or the weekly time frame. First of all, after understanding the market trend, now I start looking for some more other reasons why I should take that trade. So from this point, let me go to the daily time frame and show you what I saw from there, and what kind of confluences did I see in that market before going down to the 1 hour time frame to take my entries. This is what the market was doing from the bigger perspective. So the first confluence that you should see in this market, the first thing is that we should understand that this is a bullish market. And how is that? We normally understand that this is a bullish market because you see that the market is on an upward channel. So when the market is moving that way, that means this one is a bullish market, and we are on an uptrend still. That means that we should be looking for buy opportunities in this market. But before looking for these buy opportunities, you have to understand what the market is doing. So like in this case, from this daily time frame, this market was on a bullish trend. Then it gave us this correction. After giving us this correction, the first confluence that you should have is a breakout of this correction area. After the market breaking out of this correction area, that's the first confluence that you should have, that this market now starts to push to the upwards. And when you look at this market from when I zoom this market, and when you look at it, you can see that this market did break above this correction area. The market did break above this correction area with a strong bullish engulfing candlestick, giving us our first confirmation, or our first confluence, that we now have this possibility of starting looking for buy entries in this market. And another thing is, after finding the first confluence from the bigger time frame, I did try to go to the smaller time frame and try to see whether I can find more confluences in those areas. So I went down to the 4 hour time frame. Going down to the 4 hour time frame, I did find another confluence. Another confluence that I was looking for is after a breakout, you should normally wait for this market to give you a retest. After a breakout, you should normally wait for a market to give you a retest. Then after giving you a retest, you find your second confluence probably before taking that trade. So from this 4 hour time frame, this market gave us this impulse move. It broke out of this area with an impulse move. After breaking out of this impulse area with an impulse move, it gave us this correction. after giving us this correction. So the thing that we were supposed to do here is wait for this market again to break above this correction area with a bullish engulfing candlestick. Then after that, you should wait for a retest. You can take your entry from this point or wait for a retest before taking your entry. But this is our second Confluence. This market did give us a bullish flag at this point. So after giving us this impulse move, we had this bullish flag. And what I've been telling you guys from my previous videos, whenever you see a bullish flag, that's a sign that this market has a possibility of continuing to push to the upwards, because that's a continuation pattern. So after this market breaking above this area, it gave us this continuation pattern, then giving us our second Confluence. And when you look at this market, before the market did break out of this area, it gave us these double bottoms down here. So right now we have at least two Confluences. We had the breakout from the daily time frame with that bullish engulfing candlestick. From this 4-hour time frame, we've seen that the market did break out from this area with an impulse move, then gave us this bullish flag, which is another Confluence. Now we're looking for the third Confluence, which is this double bottom that we did have down here. We had this double bottom. And whenever you see double bottoms in the market, that's a good sign that this market wants now to start reversing to the upwards. So this double bottom is a reversal pattern, giving us our third Confluence in this market. So up to this point, we have at least 3 Confluences. So for us to take an entry in the market. So if you decided to take this entry at this point, which means you could have had at least these 3 Confluences, means you could have come and waited for this market to break above this area, then you take your entry from this point. But that's not what I did. I went further to the 1-hour time frame and tried to understand what the market was doing. And before going down to the 1-hour time frame, actually I did look at this point how the market reacted to this area, because after the market giving us this immediate high at this point, I expected this market to break above this area. Giving us something, some other traders do call them the break-off structure or a breakout structure. Yeah. So after breaking above this area, that means that there's a possibility of this market giving us some good opportunities to continue looking for buys. So that's another Confluence, but I didn't look for that either. I went down to the 1-hour time frame. Tried to see what this market was doing here. Let's look at these. When we look at the 1-hour time frame, from the bigger time frame, we've already seen that we have at least 3 Confluences. From this 1-hour time frame, we have some other Confluences. We did have this head and shoulder at this point, inverse head and shoulder. This one, we had this left shoulder at this point. Then we had that. We had head down here, then right shoulder. Our neckline was above this area. Let me see, where is it? It's here. That's where we had our neckline. Then this is our right shoulder. So that's another Confluence. Whenever you see an inverse and then shoulder, that means that this market is telling you that, hey, we just want to go up, so you should prepare for more buys in this market. So after the market giving us this head and shoulder, that gave us at least our 4th Confluence in this market. So which means that now we were confident that after breaking out of this area, we'll be in a good position to take more buy entries in this market. So whenever you look at this area, this was the previous high that this market did give us, and also this previous high served as a neckline for this inverse head and shoulder. So after the market breaking out of this inverse head and shoulder, that's another Confluence that this market has a possibility of continuing to push to the upwards. So after the market breaking above this area, you wait for a retest. Maybe you should take your trade at this point, scalp it all the way to this area. But we were looking for the bigger, from the bigger perspective, we were looking for swings. So I didn't take this trade. So I waited for this market after breaking above this area. I waited for it to give me this correction, from which we saw from the 4-hour time frame. After giving me this correction, break up above this correction area, then I start looking for my entries. So at this point, we have at least 5 confluences for this market. So I waited for this market to break above this area. Then after breaking above this area, it broke above this area with a bullish engulfing candlestick, a very strong sign that this market is bullish. So after breaking above that area, another thing that you should do is wait for a retest. After waiting for a retest, then you should now take your entries. So I did wait for this market to give me a retest. After giving me a retest, this candlestick, as you can already see, it had this long wick. I can show you this long wick rejection that we did have here. Then now, after having at least 6 confluences, I decided to take my entry at this point. Because I was so confident that taking my entry at this point is the right decision, because at least I have 6 reasons to take this trade. So after taking this entry at this point, the market did go up, give us about 535 pips. The market did go up, gave us about 39 pips. Then after giving us about 539 pips, then we had this correction. Normally, you understand, I normally tell you that whenever we have an uptrend, the market moves in 3 dimensions: impulse, correction, and impulse again. So this market gave us this impulse move, gave us this correction. So after giving us this correction, I immediately knew that this market now will give us another impulse move, of which the market did here yesterday. So yesterday the market was at this point. Let me show you the previous analysis from my previous video so that you can see what I was looking at yesterday before I did decide to take the entries. So this is my analysis from the previous day. Our neckline, then we had our right shoulder at this point, and right now, as you can already see, the market has already broken above the neckline. The market has already broken above this neckline, giving us a beautiful opportunity for us to start looking for more buy opportunities in this market. That's what I was telling you guys. Still, I'm bullish in this market because I expect this market to continue pushing to the upwards. As you can already see, the 1 hour time frame, this 1 hour candlestick did close above this area, showing us that there is a strong possibility that this market will continue pushing to the upwards. Then after closing above this area, after this 1 hour candlestick closing above this area, we had a retest. The market gave us this retest. So what we should do in this market is we can take our entry from this point. It's maybe you can wait for these 23 minutes, then you take your entry from this point. But if it was me, I could have taken my entry from this point, just waiting for this candlestick to close. Then you take your entry from that point. Taking your entry from that point, then stop loss should be just right below this area. You should have a very beautiful tight stop loss, about 72 pips stop loss. Then your take profit 1 should be at this point. This should be your take profit 1, about 239 pips. That's crazy, guys. So whenever you get 239 pips, then your take profit 2 probably will be all the way up here. That's if you are a swing trader. But if you are a scalper, whenever you see the market has given you 100 pips, just close those entries, and maybe you can leave some few runners in the market. So I could have my entry at this point. Alright guys, so that was my analysis yesterday. That was what I was looking at. And actually, as you can already see, after taking my entry from this point, the market didn't go even in any kind of drawdown. We went straight into profit. The market went straight into profit and gave us about, let's see how many pips we had before we had that correction. So from this point, the market went straight and gave us 229 pips, guys. The market went straight, gave us 229 pips, and the market then gave us this correction here. After having this correction, you can already see now we are still pushing to the upwards. And if you are still holding on this trade, which means at this time you could have had, like, let's see how much we have right here. We have about 370 pips, guys. That's crazy. That's crazy. That's almost from this point you had about 535 pips. The market gives you again 340 pips, and you had about 250 something. That means in just a few days you've managed to have about more than 1,000 pips trading only one pair and just two setups, guys. That's crazy. That's the power of understanding what you should be doing in the market before you decide to take any kind of entry in the market. So I'm expecting this market to continue pushing all the way to this area. The reason I'm expecting this market to continue pushing all the way to this area is because when you look at this market, this is a 1 hour time frame. This market did close above this area. The market did close above this area, confirming to me that the market will still continue pushing to the upwards to this area up here, because I'm expecting this area to be an area of interest, because this is a resistance area from the daily time frame, and we should not ignore it. So after reaching at this area, maybe you can take profit at this point, then you wait for this market to reach this area. Then after reaching this area, now you should look how the market will react to this area. Then if the market breaks above this area, then we should wait for buy confirmations in that market. But if it doesn't, we still look for sell opportunities. So right now I'm still holding these trades all the way to this area and see how the market will react to that area, because as I've already told you, the market did break above this area. Breaking above this area, showing us that still we are in a very strong bullish movement. So whenever you look at this, that means that there's nothing at this point that will stop this market from going all the way to this take profit. So that's all about today, guys. Thank you for watching, and if you're not already subscribed to this channel, make sure you subscribe to my channel and like this video so that I can be able to give you more of this. Thank you for watching, and this is Profit and Net signing out.